Welcome back. Well, we've taken the index calls from our experts. Let's talk about individual stocks. And Mitesh, let me start with you. What would be your stock calls?
Yeah. So Anuj, even today I have more of buy calls. HCL Tech kind of broke out yesterday. That's a buy with a stop at 964, targets of 1010 here. Bharti Airtel is a buy with a stop at 706 for targets of 755. Glenmark I would want to buy, had a good price breakout, but on a mild decline, it's around 400. Keep a stop at 392 or just below it, and a target of 422 on the upside can be looked at. And one sell call, that's on Divi's, with a stop at 3790 for targets of 3670.
Okay. And what about you, Sudarshan? Good morning. What would be on your buy and sell list today?
Good morning. See, the idea is to buy, but the process of buying is difficult now. There's been a big run-up. So I'm looking always at stocks that are consolidating, assuming that the consolidation is a replacement for a small dip. AU Bank is a buying opportunity with a stop under 628. Bank of Baroda, which is not consolidating, actually has rising momentum, strong relative strength, but is now at 3-month highs. So we are buying that 3-month high with a stop under 121. Birlasoft is the only intraday short with a stop above 343. The stock has been very weak. And TVS Motor again is a buy. Small dip yesterday is worth buying into with a stop under 950.
Okay, all right. Gentlemen, thanks very much for joining us, and we'll come back to you a little bit from now. Ashish Chaturmota is Director, Head of Research at JM Financial Services. He's joining us as well for what he would be doing now. Ashish, thank you very much. How are things looking? I mean, the start perhaps will be a little soft. We're just getting the first pre-open rates, which will settle down in the next few minutes. But how are things looking, and what would you want to do?
Hi, good morning, Prashant. So, as we have been indicating for a while that, indexes going towards 17,800 to 18,000 kind of trajectory. Looking into data, I think there is a very strong long accumulation. And I think this is basically going to be a buy and dip market. And if any dip comes close to somewhere around 17,800, I think again there will be a lot of buying interest which could be witnessed. I think the rally is going to be basically banking is going to support because banks have close to 30-35% kind of weight in index, and we have Reliance which is showing very strong signals of long accumulation. So clearly these two space which have a very high contribution to index are showing strong signals. So we can expect index to move towards 18,300 kind of trajectory in next couple of trading sessions. As far as individual picks are concerned within the banking basket, I think ICICI Bank has been hitting fresh all-time highs. So now I think Axis Bank, some kind of underperformance was there in the last 3 months. We can see a good catch-up rally because we have witnessed good OI build-up, as well as strong breakout on the weekly charts has been witnessed. So Axis Bank could be bought with a stop around 760. On upside, my short-term target would be 800, but positionally we believe stock is poised for a move towards 830, 840 levels. In the QSR segment, I think the entire space is buzzing, and Jubilant Food in the F&O segment is showing very strong signals. Stock has seen a good buildup of long positions as well as a breakout on the weekly inverted head and shoulder formation. Since the day the new CEO has joined, I think there's a re-rating which is taking place in the stock. So with 588 as a trading stop loss, I think 660, 670 could be a short-term target one can expect in Jubilant Food. In the agrochemical space, I think PI Industries is showing very strong signals. Company has indicated that a new capex of close to 650 crores is what can be seen, and this could be an additional trigger for the revenues to go about 20% CAGR in the next 3-year period. Stock is witnessing good amount of long build-up in the last 2 weeks time frame. So here one can initiate a long, keep 3340 as in trading stop loss. 3800 would be my short-term target in PI Industries. And last but not the least is Adani Ports. I think this stock has seen a very strong accumulation in the last 3 months time frame. Here one can initiate a long, keep 810 as a trading stop loss. 870, 880 would be my short-term target in the Adani Ports as well.
Okay, it's a pleasure speaking with you. Thanks, Ashish, for joining in. Have a great day. Gurmeet Chadda is still with us. By the way, the pre-opening rates have settled, and it's not bad. I mean, it's about a downtick of 80 points. I don't think that would be lost on anyone because the market has been running up so much. So perhaps some amount of profit taking is the need of the hour. Gurmeet, Ashish was talking about the consumption stocks and the boom there. I wanted your thoughts on something like Devyani International. That stock is up 20% in just 1 month. At this 215 price, is the risk reward still favorable for an investor?
I think it's done very well since listing, and Sonia, we've discussed multiple times. I've been extremely positive on the QSR space. I think our booking time has reduced less than 5 hours from in urban areas from about 9-10 hours as per reports. And I think there's this growing trend and you'll see more formalization, more organized players taking market share. So between Devyani and Sapphire, I think both look constructive. I also think once this leadership issues and a lot of things get settled with Jubilant, with the price correction we have seen, even that looks a very decent play. And one which is slightly unrelated, which has probably Narishko and only Starbucks in the portfolio, like Tata Consumer. I think what probably we are seeing is huge premiumization in almost every items we are seeing, whether it is pulses, spices, jams. Recently, they extended the Himalayan brand to honey and jam. In fact, they're gaining market share in salt as well as tea, almost by 300-400 basis points, which is bread and butter. And the size of the opportunity is huge. So pulses is almost 1.5 lakh crore market, 90% unorganized. Your snacks minus confectionaries is almost 80,000 crores. Breakfast cereal is now a 3,000 crore market. So it's a huge category, and I think you'll see multiple levels of growth, coming our way.
Okay, Gurmeet, we'll let you go on that note today. Thanks a lot for joining us. Have a good day. Let's now talk about the IT sector. We have Sandeep Agarwal joining us. He's, of course, tracking the sector at Edelweiss, has been the big bull on IT much before, it became the consensus call. Sandeep, good morning. Before we talk about the overall sector dynamics, I just wanted your views on this news flow that came from Wipro. Is this likely to be company specific, or is this sort of giving indications of perhaps some more headwinds for the sector? Sandeep, sorry, you'll have to unmute yourself.
No, I think, right now there are some company-specific issues which are coming in some cases. And I think we have to, not take that only into account because there are many factors to it. We don't know the internals of it, why it has been done. But the sector demand perspective doesn't see any challenges. Even and if you see, Wipro sometimes generally preempts things. In the past, we have seen they have stopped dividend for a short period of time when COVID came, while no one else did that. So, Wipro generally takes proactive and very strong steps. So I would not read too much into it.
Okay.
Okay. No, so what does it mean then? I mean, others are also going to be doing similar things, so it keeps things on an even keel. That's what you're referring to in terms of attrition and wage costs, etc.?
No, so one thing is very clear. See that, the attrition is falling very sharply, and it is falling because of startup ecosystem completely drying out, and also now FANGs recruiting less aggressively than earlier. Right now, the only challenge we are facing on the recruitment side is from EPAM. So the situation is not at all as bad as it was in the last reported quarter. Mathematically, obviously, when you do the calculation LTM attrition which this companies report, then one unfavorable quarter going out, coming in, and one favorable going out, it impacts. But otherwise, there is no such problem. I think it is going to be very positive for the sector. Supply side will cool off. That will bring down the pressures which we have seen on the margins because of insane kind of compensations, which has financial interventions which has happened in last 3 to 6 months time.
Sandeep, hi, good morning. Let's talk about the big movers, right? I have to ask you about Tata Elxsi. I mean, that stock has found itself a new set of wings. Not that it wasn't doing well already, but are there any fundamental triggers which is driving the stock now? And is the risk reward still favorable for an investor?
See, the question of risk reward is a very interesting one. Now, if you are taking a long-term structural bet of 3 to 5 years, then, everything, all this sector, if you see the tech sector, they have done extremely well because they are compounding stories. There are times when, they could go 20% correction for 3 months, 6 months. There could be some multiple correction and all those things, which we cannot avoid. Coming to Tata Elxsi, the segment in which it operates, that is the ER&D segment, we have to remember that, ER&D has been anticipated to grow at 2.5 times of the IT services outsourcing space for next 10 years, which means that the average CAGR expected for the ER&D space is 14% versus 6% for the IT services, according to one of the NASSCOM reports, and many other reports substantiate that. Which means that Tata, the space in which Tata Elxsi is there itself will grow more than double the growth rate of the IT services space. So they are natural beneficiary. Now, is the stock expensive? Yes, it is extremely expensive. Is it in niche services? Yes, it is in niche services. Is it gaining market share? It is gaining market share. Will it continue to be expensive than others? Yes, that answer is true. But can it go for time correction of 6 to 12 months? Can it go 20% correction because of multiple correction? Yes, those are very high possibilities. But if someone is taking a 5-10 year bet, then I don't think there is anything to worry. But these are elevated levels for sure.
Okay. Sandeep, do you think the overall correction in large cap IT is over? Do you see, for example, Infosys getting back to all-time highs? And if yes, by when?
So, Anuj, I will tell you this, right? In my view, the way it happened when in June 2020, if you see NASDAQ was making new low and Indian IT index was also making new low. And then in just 6 months time, they all went through the roof. And that time the concern was growth, and this time the concern is margin. Now, why there is a concern of margin is that you are saying that the attrition will remain high, manpower cost will remain high, and because of that the margins will be lower. My point is that this is an impossible equation which everyone is trying to build. On one side we are saying that demand is going to fall, there is a US recession which is coming, and on the other side we are saying that the margins will also fall because manpower will be in high demand. This is not a possible equation. So in my view, the sweet spot for the industry is between 15 to 20% attrition, and I think in next 1 quarter to 2 quarter time the industry will come in that sweet spot, and you will suddenly see 300 to 400 basis point margin improvement for the industry in just 3 to 4 quarters time. I will not be surprised if it happens earlier than that, and the street will have to upgrade the EPS estimate across the sector for all the companies, and the stocks will again, I think, if not all-time high, because there is rate hike which impacts the multiples, but they will be closer to that number.
All right, Sandeep, we'll leave it there today. Thanks a lot for joining us. Always good talking to you. But let's now take the 9-10 calls. The pre-open has actually settled slightly worse than what the S6 Nifty was telling us. But remember, the first dip normally gets bought in uptrends. Sudarshan, if we start here, is there an index trade, and what's your 9-10 call?
See, for the index, I think will be very choppy. So it's best avoided. And the AU Bank is a buy with a stop under 628.
AU Bank. Sudarshan, thanks for that. Mitesh, your 9-10 call?
I would go with a recommendation on Glenmark, buy around 400 with a stop at 392 for targets of 422.
Okay, so just a couple of more stocks that perhaps you want to look at this morning. Sona BLW is one stock. In case you missed it, Blackstone will be selling Sona BLW shares today via a big block deal. Now, 13.6% stake in Sona BLW will be sold by Blackstone as a part of the block deal today. And Blackstone is looking to raise about 3,200 crores via this block deal. Now, currently, Blackstone holds about 34.1% stake. And the reason the stock is down even in pre-opening is because the floor price for this block deal is 500 rupees a share, which is about 7% discount to the current market price. So this is the big block deal that you can expect today, and Sona BLW in focus.
Okay, so Sona BLW is on focus. Let's go across to Sonal. She's tracking Larsen & Toubro. Sonal?
Oh yes, I am, because Credit Suisse has written on Larsen & Toubro, and in fact they've gone ahead and increased the target price on the stock to 2,250 versus 2,000 rupees per share earlier, and they expect the company going forward to benefit from the uptick that we are seeing in the capex cycle as well. They say it is deeply cyclical and all parameters can be positively influenced once it starts benefiting from or leveraging from the uptick in the cycle that we are talking about. They say that peer stocks have re-rated dramatically, while L&T has not re-rated to the same extent as far as the peer comparison is concerned. The core EPC business is trading at just 16 times FY24 PE, which is lower if we compare it with the peers. On absolute basis, it trades at market cap lower than the December 18 levels. So still there is valuation re-rating expected in the EPC business. They may have additional tailwinds coming in from persistent strength in overall ordering that we are seeing, lower commodity prices and asset sell down as well. Credit Suisse says that lower interest costs on reduced debt and any steps to leverage their energy transition will be the additional catalyst for the stock. They have raised the target price on revision in their valuations and also higher multiple, that is 20 times for their EPC business. They're expecting specifically re-rating in that particular counter.
Okay, thanks a lot for that. Well, Max Healthcare is also in focus. Ekta is here to tell us why. Ekta?
Well, there is a wait up event in Max Health. This is after the big large trade that took place. There is an upward revision in the investability weighting from 49.36% to 76.19% when it comes to the FTSE indices. The weight should probably lead to inflows of $38 million. Adjustment likely to take place tomorrow.
Thanks a lot for that. Let's see how the actual open pans out. Dr. Reddy's is the top loser and Sun Pharma as well. Actually, Mitesh, you tracked Sun Pharma. It sort of came very close to that multi-year breakout and has fizzled out after the numbers. Chartically, what's the next level to watch out for?
Anuj, I think you're right to point out. I think this level of 950, 960, I think has on multiple occasions, kind of seen a historical top being formed. And even this time, I think the stock did that. It made a weekly closing high of 943 with an intra-week high of 952 on the 29th of July, the week ending 29th of July. But I think eventually the structure is positive. I think, hitting an important level, we'll see some kind of profit booking and supply. But I think over the next couple of weeks, I should expect a breakout. Once that happens, the stock can head towards 1,040-50 levels.
Okay, Mitesh, thanks for that. The first rates are in. The Nifty is opening just about 34, 35 points down. Now slightly more, 44. But the bank Nifty is actually in the mood to see the dip getting bought. Maybe I'm speaking too soon. It's down about 120 points. Actually, the market is still trying to find the first equilibrium. The Nifty is now down 55 points, 57, 17,887. Remember, the level that I was watching out for was 17,860, 17,890 now on the Nifty. So almost there. Let's see if that gets bought or not. Let's talk about the stocks which are leading the market down. For starters, of course, IT names. Wipro is down about 1%. That had news. And, of course, what happened overnight in NASDAQ and the bond yields. Infosys is a bit soft. There's a bit of a decline in Tech Mahindra as well. Dr. Reddy's and Sun Pharma. Dr. Reddy's is, in fact, down 3.5%. I don't know if I'm missing something here. Sun Pharma is down about 2% as well. ONGC is down close to 2%. There's decline in Cipla. There's decline in IndusInd Bank. Reliance is a bit soft. ICICI Bank a bit soft, Titan, Tata Steel, all these stocks now a bit soft. On the upside, well, no stopping Bajaj Finserv, that's up again another 0.5%. Apollo Hospitals is up a bit, ITC is up a bit, gains in Tata Consumer, that's a stock that Gurmeet spoke about. HDFC Life has been doing well, Hero Motor doing well, Larsen & Toubro doing well, but overall for the market, I think down but not out. There will always be an attempt to buy the first dip. Let's see whether they're successful or not. Sonia, over to you.
This is not a bad opening. I mean, in my opinion, because of the big run-up we've seen, some little bit of profit-taking won't harm anyone, and that's what we're seeing today. The mid-cap index also is barely down, about 50-odd points. Advance decline ratio is still in favor of the advances. Now, we were talking about this whole consumption basket moving. Yesterday, Devyani International was a big mover. Today, Sapphire is one stock that's moving up with quite a bit of strength. You have Nava Limited. We spoke about it in our top 10 segment. So Nava is up almost about, I think, 3%. It should come up for you. Texas Retirement Fund has bought shares worth about 27 odd crores. Okay, 4.5% now on Nava. So keep an eye out on that. Natco Pharma is in the green. It's got a US FDA nod for a cancer drug and has a big market size, almost $50 million. So keep an eye out on that. Max is in focus, Max Health. There's been an upward revision in its investability weighting. So Max Health up about 0.6%. And ONGC from the frontliners, we spoke about that. All Adani Group stocks are also rallying once again. So Adani Power is up about almost 4% odd. Adani Enterprise is also in the green. Sona BLW is down 5%, gravitating more towards its floor price of 500 rupees. So Sona BLW on expected lines. SBI Cards, little profit taking over there. Wipro on the back of the news flow is down 1.5%. And a couple of these auto stocks are seeing a little bit of profit taking. Craftsman Auto, since we're talking about auto stocks, they're beginning operations at a new plant. Indo Amines, another stock, there's a plant expansion that's going to happen for them. So Indo Amines is up almost 15% actually. So do keep an eye out on that. And on the back of the June data for that the TRAI has put out, Vodafone Idea actually lost quite a bit of subscribers. So Vodafone Idea is trading a tad bit in the red. It's all about stock-specific action. But as I said, this is a buy-on-dips market, and it's very evident from the fact that now the mid-caps are in the green, and they moved up about 15 odd points.
Well, they have. I mean, even the Nifty, for that matter, is down just, 35 points. I mean, yesterday's high, which was made in the second half, was about 965, 17,965 or so. It gave up 30 points in the last 30 minutes, and it's down a little bit more from there. But this is, just what, from yesterday's high down 50, 60 points or so. That's it. 17,911 on the Nifty is where we're at. Just a broader market picture, 2:1 advances to declines ratio. That's a broader market right now. So Adani Power is coming up as a top gainer with volumes. It's up 3%. BF Utilities is up 7% on decent-sized volumes. There is NDTV, which was up 10% yesterday. It starts up another 5% right now, 5.5%. Just picking out things with volumes. Chennai Petro is up 3%. And there is Natco Pharma. Natco, of course, has been a huge underperformer. That's up about 2% or so at this point in time. Sapphire Foods is up about 3% or so. So volumes are just still about picking up, so we'll give it some more time. Sona Comstar is down 6%, so that'll come up. Dr. Reddy's we mentioned. SBI Card spiked 5% in the last 30 minutes yesterday. We were pointing that out. The RBI discussion paper came in the evening. It's down 3.5%, SBI Card. ONGC is down 2%, Sun is down 2.5%. Wipro is down 1.25%. Happiest Minds went up more than 10%, 10-12% yesterday. It's pulling back about 1.33%. And Mindtree is down about 2% or so. And actually, it's tech, mid-cap tech. A lot of things are starting to come up on the losing side right now. ICICI Securities was another one which went up 7-8% out of the blue yesterday. That's back. It's down 2.5%. So a little bit of pullback where you saw some very large moves yesterday and over the last couple of days is what we have going on. All in all, I mean, on the Nifty is just about 40 points lower. Our market master is Andrew Holland. He's Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, great to have you with us here. Thank you very much for your time. Some of the near-term indicators like the relative strength index, etc., are extremely stretched now. Just a quick near-term view in terms of where we go from here. Directionally, Andrew, any thoughts?
We could stay higher for longer, but it's all markets, including ours, are looking very overbought. I think the Goldilocks scenario, which people are trying to bake in, is probably not going to turn out to be that at all. So I think it's whether it's a bear market rally for us, but certainly globally, I think it is. So you could see a downtick from here because the Fed minutes were not conclusive, shall we say, in terms of what they were trying to say. And Prashant, I've just come back from the US, and a few things. I've been saying that I think the Fed will go on hold in October, and I'm still sticking to that for the moment. But two things that kind of struck me when I was there is one that in the hotel I was staying, which is a well-known hotel, when I went down for breakfast in the morning, that they said, no, you have to order it for room service because we don't have staff. There's a big staffing issue in the US, and I think that's what's probably going to keep employment levels higher and probably inflation higher too for a little bit longer than I was expecting. So that was the first thing I noticed. And the second thing is that, most of the restaurants, the top restaurants you want to go to, availability was there. And in San Francisco, where it was, everything shuts by 10 o'clock. Now, I don't know if that's because, they just can't get the staff or, but I was very surprised. So there's a few things in the US, I think, which are stickier than I thought. So I think the Fed will have to do more in terms of rate increases and get the aggregate demand down, because it's certainly a problem, I think, for the US. But it's a lot better than what's happening in Europe.
Okay, maybe that's a global phenomenon, Andrew. We're seeing that in a lot of places. By the way, since you spoke about hotels, just look at Indian hotels. That's almost breaking out to a fresh all-time high. But Andrew, so are you still sort of? What's your view then? Since you run a long-short fund, are you looking at now raising some cash level or maybe perhaps going on the short side as well? And if yes, what kind of stocks or sectors do you think you'll have a negative view now after the rally?
So I think the hedges have been high, Anuj, as the market's moved higher, and I think that's where we'll continue to be in the very kind of short term of the next 1 month, because we think coming into September, there's going to be a few headwinds which globally I think are just being forgotten. If Russia decides to do anything on the, in terms of shutting down the gas, Germany will just go into free fall in terms of the economy, and that will send the euro below parity. So all of these things I think will play out. So I think it's become very rotational in the last few weeks in terms of which sectors and companies. So I think overall, I think the risk for the market generally is to the downside. So I think those sectors which pushed the market higher initially, which was autos and banks, will probably see the biggest profit taking as the market kind of starts to head back south.
Andrew, hi, good morning. We were just discussing with the management of Maruti about the kind of demand that they're seeing for new products, and it's been phenomenal, right? Maruti, M&M, TVS Motor, Eicher, demand is coming back in a big way. Do you think that autos, of course the rally has already happened, but do you think that this is a start of some sort of structural uptrend in the auto space?
Yeah, no, I mean, I don't know if I mentioned it last time, but I went to see the Mahindra new kind of SUV a month or so ago, and was told that it was sold out and there's a 2-year waiting list. Whether that's come down, I don't know. But the trend for the auto sector is demand is there, that's for sure. And with commodity prices, having kind of eased a lot, probably will continue to ease. That's going to be the tailwind for the sector. So I think whilst I'm saying that, it could be one of those which will see some profit taking. Banking and autos and consumer discretionary are sectors which, if there is a fall led by these sectors, is where you should be picking up, because I still think the deflation trade is going to play out by the end of the year, and that leads to these sectors. So I haven't moved away from that. I'm just worried about some of the things which the market's trying to just take in its stride and say everything's going to be okay.
One of the big worries was oil, right? And that always, when it moves like it did recently earlier this year, that's pretty bad news. But it's cooled off substantially. We're looking at a $40 drop from just two and a half months back. Now we can ponder over whether it'll stay here or move back higher. But that's got to count broadly and kind of paper over some of the other concerns that you're highlighting.
Yeah, no, that's right, Prashant. I think the oil price is telling you that there's a problem with global demand, and I think the market's taking it positively, because obviously it should be helpful in terms of inflation going forward. But it's you're then ignoring the fact that you're going to have a global recession, and it's whenever I look, particularly in Europe. Things are spiraling down very, very quickly. And I think the market's just not taking that into account. It's looking on the rosy side of the equation and saying that interest rates won't rise. But again, I think a lot of people don't remember the last recession of 2000 and the pain it had in terms of markets as well. So, I think everyone's trying to say that bad news is good news, Prashant, at the moment in terms of that interest rate environment. But at some point, bad news will really be bad news.
Okay. Now, Andrew, what about the Indian IT stocks? Because that's where the big debate has been in terms of the valuation reset, given the higher interest rate environment. But we've seen the stocks make a big comeback, even in NASDAQ and back home. What's your view?
Yeah, so I think the IT stocks are going to be really a hostage to what happens to the tech stocks in the US, and that's been playing out for some time now. The correlation's very high. So if you have a very positive view that the tech stocks in the US are going to start doing well, which I don't, then I think this rally in IT stocks again will probably fade as markets correct and tech stocks correct in the US, because I think that's where the most pain I think will be felt in the US economy.
Okay, so what does one do then if one has IT stocks? Because, I mean, these are stocks, if you look at even the recovery, despite the recovery, stocks like, say, an HCL Tech are down about 30% this year. Do you move out? Do you stay invested with the hope that, these are still good quality companies that will recover at some point? What do you do here?
So they've always been a place to hide in when markets fall, and obviously that could play out again. But to be honest, I just think you have to be in sectors which are going to be beneficiaries of a deflation trade at the end of the year. That's going to be banks and autos and consumer discretionary. I can only think of those three. The rest will follow and relatively underperform, but I think this is where you're going to get the biggest bang for your buck going forward. So IT is probably I just don't think there's enough tailwinds for the sector, given that it's just following what's happening in the tech stocks in the US. So unless you have a very strong view there, then I think there's other places you can play, or other sectors you can play, which will take you forward in terms of getting better returns. I'm not saying any of these stocks are bad, but I just don't think there's any catalyst at the moment when the global economy is going into recession.
Okay, Andrew, one last question. Do you fear this year United could be facing relegation battle, going by what the first 2 days?
Yeah, well, we've become, a kind of a global joke. Maybe the stock will become one of those meme stocks now. I don't know, but it's looking pretty dire, and I'm not hopeful for the game on Monday against Liverpool. So probably won't even stay up. It's a bit late in the evening. But usually I would, but I just fear a little bit like the markets that we're probably heading south for a little bit longer than we expected.
I was wondering, Andrew's generally more upbeat in his interviews when he joins us, and this time he is so dull, and I couldn't put my finger on it, and finally, I realized that he's a Man U fan as well.
It's not a good time to be a United fan right now, I can tell you that.
Well, the times change, right? I mean, things change. It's a cycle, I guess. At some point, United's going to get back up. Andrew, what say?
Well, I've just been watching the All or Nothing, where Arsenal were bottom of the league this time last year. So I'm hoping that the same will happen for United.
Mr. Musk doesn't want the team. That's the other one, right?
I don't think anyone took him seriously the first time when he said that he wanted to buy the team anyway, right?
Absolutely not. Well, Andrew, it's a pleasure. Thank you very much for joining us. Great speaking with you, as always, here on CNBC-TV18. Well, the market, I think, now is taking a bit of a breather. I mean, not a proper breather yet. We're down 65 points, under 17,900, 17,883 or so is where the index is at. So, by the standards of what we've seen over the last so many days, where any shakeout has been, any short, shallow dip has been bought. I mean, this is a pretty large one by those yardsticks. 1/3% down on the Nifty is what we have. We got the next management with us. Berger Paints is with us to talk about the decline in oil prices and commodity prices that they are seeing, and how this will help their margins going forward. Abhijit Roy is Managing Director and CEO of the company. Abhijit, great to have you with us here. Thank you very much. Just contextualize to us what you're seeing in terms of prices for some of your key raw materials, key inputs in Q2 so far.
So raw material prices, as you said, part of it is linked to oil, and therefore there is a decrease in the prices of some of the raw materials. Q2, you will not see the impact in the margins, so much, because there are a lot of stock in the pipeline in terms of finished goods and raw materials, which will probably go right up to September. But the Q3 impact will be much stronger, because of the decreasing prices of raw materials.
Okay, what about, so what will the eventual impact be in terms of demand, in terms of margins? What is the expectation for the rest of the year?
So rest of the year, Sonia, is difficult to predict because it is very volatile. It keeps, sometimes it decreases. Now after 3 months, it might again start going up. But next quarter will be far better. In terms of gross margin, there should be an improvement of about 2.5% possibly.
Abhijit, good morning. Now Berger Paints normally keeps pace with Asian Paints. I'm talking about even the stock price and even the financials and volume growth, etc. But this time you lagged them quite a bit. How come?
So we grew by 54%. There was a little bit of but in the profit growth we were ahead of them. Actually, in terms because we deliberately took the strategy of staying away from putty pricing, which had a negative effect on the overall volume and value growth. So therefore, that was one of the reasons. The second reason was we had a base effect. Last year we had a project which was a very big project in Andhra Pradesh, which is a school project which we had done. And that base was very high in that this particular quarter. So that had an impact on the overall sales growth.
Okay.
Otherwise, we would have probably grown at about 61% had that base not been there.
Got that point. The other issue is about this competition, right? I mean, so far, you of course Asian Paints is there. You are there in terms of the large players, and the others are also there, but perhaps not as big. Now we have some new competition coming up with players having some serious backing, right? Do you see the sector dynamics changing?
Well, competition has always been there. Lots of international players have come in the past. Domestic players, has also come in. JSW has been there for now 3-4 years now. And there are other players who have come in and, then competed in the paint space. There was Kamdhenu at one point of time, JSW now, Birlas are going to step in. So we have to be prepared, we keep doing our job. And we hope that, we do this job well. And competition will be there. It only strengthens our resolve, and we have to innovate and we have to give better services to the customer, better products to the customer. That's what we are supposed to be doing. We have our own strengths in terms of network, in terms of years of, brand building, in terms of, the contacts with the applicators, the painters, the interior decorators. So that is going to stand us in good stead. We are not overly worried, but any competition also helps you to become more energized. You become more careful in your scheme of things. You don't be complacent. So that's a good thing, actually.
Okay. So earlier you had given us a target for double-digit volume growth for FY23. Would you stick to that target, Abhijit? And how are demand trends in general?
So yes, I stick to that. We will probably reasonably, unless something happens, in the third or the fourth quarter, which is dramatically different, we should be able to clock a double-digit volume growth. The demand trends, what it was in the first quarter had two, positive impacts. One, of course, was the bases were on the lower side, so we had an advantage there. The second was that there was in general a far higher growth rate, possibly some pent-up demand which had come up in the first quarter. Second quarter, the demand continues at a good pace, but not as strong as it was in the first quarter.
Fair enough. Just to go back to margins, you said the full impact will come through in the third quarter, right?
That's right.
Not Q2.
That is right.
And for the full year margins, which you guided earlier of between 15 and 17%, that's what we should expect?
That's right. That should be there.
Okay, fair enough. Just a quick point on pricing. Q1, of course, was a quarter of meaningful price increases. Q2 has been very minuscule, right? I mean, is there any chance of giving back some of the gains the price hikes that you've taken? Does that happen?
Prashant, it does happen, but it has to be stable, in terms of the lower prices for a long period of time. As you have been seeing, the oil prices keep going up and down. It's very volatile. In the first quarter, rather in the fourth quarter of last year, it was on the lower side. First quarter, it went up. Second quarter, it has gone down a little bit. You don't know what will happen in the third quarter. So unless things stabilize, we can't say that, we will pass on the benefit or, is there any benefit at all which is for the long term? So if we see a trend which is stable for a long time, then obviously we will start looking at, passing on the benefits to consumers.
Okay. What about capacity expansion? You have a new phase, which is new capacity, which is coming on board by, I think, this month to next month. Any more expansion plans on the annual? If yes, how much are you looking to spend and what will your eventual capacity be?
So we are one of the biggest capacity build-up is happening in our Lucknow, near Lucknow, the Sandila Industrial Estate. That is going to come up for production from October and November beginning. More or less, it's ready now. In the last minute, final touches are being given. And we are reasonably confident that we should start off in November. That will increase the capacity by about 15,000 metric ton per month at the initial first phase and can be expanded at a later date. We have purchased one land in West Bengal in the Panagar industrial area. That one also we haven't started yet because we are waiting for the permission of the environment clearance, etc. So that will probably take another 2.5 years for that plant to come up. That will be primarily be on construction chemicals and industrial resins. And then we are looking at a fresh plant in the east somewhere, and that we'll have to buy the land, and then probably another 2-3 years down the line that plant will come up. So this is the plan as far as factory expansions are concerned.
All right, Abhijit, we'll leave it there today. Thanks a lot for joining us. That's Asian Paints. Just by the way, I want to make a couple of points on the market. The bank Nifty. Sorry?
Sorry, Berger Paints. Sir, I think you said
You said Asian Paints.
Sorry, Berger Paints. Sorry, my apologies. Berger Paints. Actually, Asian Paints is something which is very close to my heart. So maybe I would have said that with subconscious mind. The Bank Nifty is about to break into the green. The point you made in the morning as well, that the Bank Nifty is the one which could outperform after 2 days of underperformance. And on the Nifty, 17,860 was the level, purely going by the options dynamics as the first base. Today's low, the morning low is 17,863. And from there, it's bounced about 40 points. So let's see if that now holds, because the first dip gets bought. But on days like today, you always worry about the second dip. But the first dip has been bought, at least on the Bank Nifty. We'll take a break. Up next, we'll connect with BD Nanavati, ED and CFO of GSFC.